But thank you so much, Linda. I appreciate the introduction. My gosh, let me get my screen ready to share, and we'll just get this thing underway. I need to keep track of my time because I'm long-winded, so bear with me. If I can minimize that, there we go. Wealth without waiting. That's what we're here for. We're going to learn what the banks have kept secret from us. But first, we're going to do some housekeeping, if it's okay with you. And my slides are not advancing. Of course, they're not. There we go. And they're not. Okay. Well, we'll do it this way. Special thank you to Linda Fisk for having me here today and sharing with you. She also serves on the advisory council group for Trinity. And leadHERship Global has just agreed to be an annual sponsor of our ministry, supporting the poverty initiatives that we have worldwide. So tremendous thank you for what all of the work that Linda does on behalf of the people in this world. So here's some housekeeping notes. Please hold on to your questions till the end, because I'm barely functional, and let alone having to read the chat at the same time. Make sure you have a pen and a paper, because there's a lot of stuff and you're going to want to know, make some notes, make some questions. This program primarily works for the USA because of the banking and insurance laws that we have that are different than most other countries. Now, I'm going to be cutting and chopping a video. It's a little bit too long to show the whole thing, but I have an offer that'll help you see the entire presentation if you want to come back tonight. So when we get to the video part, I'll be cutting and pasting and stuff like that. So it's not going to be smooth.
And David, just so you know, we're seeing all your slides. It's not in presentation mode.
You know what? I tried it and now it does.
There you go. Perfect.
Of course it does. You got to be smarter than the equipment. Now, okay. That's what it's supposed to be doing. Now you got to have the lawyers. They're like, do you know the lawyer joke about how many does it take to, never mind, we won't go there. But I want to give you a quick overview. There are some disclaimers that we have to go over. Trinity is not a securities dealer, broker dealer. We're not a licensed insured. We're not a licensed mortgage broker, although I've been involved in financial services since 1995, on and off, from everything from mortgage brokerage to real estate investments. In Houston, Dallas, we bought 282 properties in 1990 and 91. And then we got embezzled for over $4 million. But we won't go there. We're going to keep going. But what you need to know is this does not constitute an offer for sale or solicitation to offer to buy anything or whatever. Okay, it doesn't purport to contain all of the material that a prospective person would need to do. We make no representations or warranties. And advisory disclosure. Despite all of our efforts, some of this information may be out of date. Things change, laws change, everything changes. So if you feel uncomfortable at any particular time, bail out, okay? No harm done. A little bit about Trinity International. Trinity Brands is an umbrella organization of Trinity International Ministries, faith-based organization. It's a Wyoming LLC founded as what's known as a private member association. It's stated in the IRS code that it's possible. We are not a 501c3 charity, which makes it very difficult to raise funds. That's why we have this particular avenue, as well as a couple of others that generate earned income for us. 100% of everything that Trinity does in all of its facets goes to support the mission. I literally give half of my modest income to Trinity, as well as whatever we do. And so therefore, we operate as a ministry of finance and education, both here in the United States, mainly in Uganda, but we have people in Tanzania, Zimbabwe, Kenya, Nigeria, even in the UK and in Canada. So we're kind of like spread like peanut butter. We're all over the toast. And like I said before, we don't provide any tax or legal information. So please check with your legal representatives to verify, validify all of those things before you make any decisions. In the USA, we operate under numerous brands. You've heard Linda talk about Trinity Publishing. That's Influence Magazine. That's also Lead Forward Magazine for the Nonprofit Prosperity Council and Synervision Leadership Foundation. That's another production that we do pro bono. We have the Trinity Brands Debt to Wealth Solutions, Trinity Marketing for Causes, which is a pro bono marketing agency, and soon to come T5, which is a podcast / mastermind for Christian-minded business executives, entrepreneurs, and small business owners. That'll be coming out just before the first of the year. So our Debt to Wealth Solution serves as an independent agent of United Financial Freedom and United Financial Wealth. They're sister companies with the same vision, debt to wealth. Buying back America, one family at a time. And I just love that. A little bit about United Financial Freedom. That's Jeff Washenko. He's one of the two owners that founded this organization in 1997. It became the fastest growing mortgage company, in Utah. They expanded into the neighboring states of Colorado, Idaho, and a couple of others. In 1999, they determined that all of the clients that they had been writing mortgages for were coming back to them asking for refi because they used up all the equity they got from the mortgage and were buying boats and cars and you name it, they were buying it. And so they came to the point that it's a debt epidemic in this country. And that's why it is that way, because the banks and the government operate a capitalist consumer marketplace here in this. We are brainwashed to think that everything we need is not enough and that we always have to have more. So we're stretching our limits trying to get more money. Well, in 2004, after spending $30 million, they launched the first version of this revolutionary financial services program that actually works in real time to eliminate debt without any difficulties, just through math. To date, we've helped over 2.8 billion with a B debt elimination, and that's just of June in 2025. So it's over 2.889, heading towards 3 million. So it's a big organization with a lot of caring people. Tonight, before I get to that, one thing that's really of note, do you remember in 2008 when the financial crisis hit and everybody was going broke and the banks were being bailed out by the government and so forth? Well, Ernst & Young, the largest, one of the largest accounting firms in the world, chose this company to be the Entrepreneur Award, the recipient of this award for the financial services in 2008. We have been featured in just about every financial magazine there is in this country, and I've even seen articles in international magazines about it. So phenomenal company, phenomenal people within it. There's going to be 7 free gifts. Now, 7 is God's number, and that's why I have so many, is that after this presentation for those who stay until the end, okay? So just be mindful of that. However, you're not going to be able to buy anything tonight, so put your wallets and purses away. This is for information. You'll have an opportunity to see more, and we'll talk about that later. Okay, you're welcome to receive the slides and the replay, which Linda is going to help me make sure you get. Now, here's the hard fact. Basic financial education in this country and many, many other countries is that only about 1% in the world are financially educated. Now, 10 out of 1,000 here in the United States fall into that category, and it's even worse in other countries. So that's a big need that we are trying to help fix through education and opportunity. So let's begin, shall we? Now, I don't know. I think that might be too high. Today, oops, what did I do? Today, women, there are more single more single than any other. Married, there's 39%. Divorced, there's 13. Widowed, 7. Partnered and not married, 17%. Now, you have to also know that a third of those people are in same-sex couples. But as you can see, there's a lot of need for women. What financial topics do women want to learn about? Well, as you can see, 75 or 85% want to know about lifestyle and retirement, generating income for life, and how to invest and plan for retirement on a modest income. But that's not enough. We want to look at all women versus women of influence. And you know, my feelings about that is I'm a big proponent of women in business. You're the hardest working people on the planet. I don't know anybody, man or woman, maybe women I haven't seen yet, that can't outwork a man 7 days a week. But the average household income for all women, 91K. Women of influence, however, making 10 grand more. But look at all the other incomes: average personal income, earning power, feeling confident you're spending, saving, and investing wisely. The numbers are not as good as they could be for all women. Women of influence have a tendency to be a deeper financial awareness than others. And I don't know if these are, let me see if I can get, there we go. I can see better. Okay. But the bag lady fear it persists. The bag lady persists among even the most successful of women. What do I mean by the bag lady fears? I don't know. Tell me. You know, it looks like we've got a stall. There we go. Okay, 49% of all women fear ending up broke and homeless. Deep down, I worry about becoming a bag lady. Single women say it's 56% of them feel that way. And then there's the rest of women. Married, 43%. Divorced women, higher than that, 55%. Widowed, 48%. $100,000 a year household incomes, they feel more secure. Women of influence, almost half of them. And these are percentages of respondents answering often or sometimes. And this is not a survey that I performed. This comes from Allianz Insurance Company of North America. Now, that just happens to be information I found on the internet. It is not one of the people that we work with, although we could. So, a little bit more information about women. Know your women, money, and power financial personality. What type of personality are you? Well, there's 5 different kinds, and based on how you answer the survey, you'll fall in any one of the characters, from financial dreamer all the way up to financial initiator. Now, how many questions is that? How hard do you have to work at it? These are the questions. Now, I'm not going to go through them for the sake of time, but as you can tell, there's not that many questions that make up this survey, but we have an opportunity for you to get this survey and full explanations about it afterwards. But managing money and investing, how strong are you? Strongly agree or strongly disagree, and so on and so forth. Sufficient knowledge about money and investing. I feel highly responsible. Those are the types of questions that you need to take hard looks at yourself, because most of the world thinks that the men are the ones who have the financial wherewithal. Sadly, that's not the case. Now, here's a famous guy who once said, don't give people what we think that they want, give them what they never thought was possible. And that's how this MoneyMax and MoneyMax Pro platform came into being. As I mentioned before, this is June, we're $2.8 billion in debt eliminated, and I believe it's close to $10 billion in assets under management. We work with 13,000 banks and credit agencies, so we're kind of a big deal. So in this masterclass, you're going to learn how tens of thousands have used this tech to do great, great things. You don't need more clients, like Linda said. You don't need a raise. You need the right financial GPS. We have it, and you can have it too. Now, you and I know how a GPS works. It's either in your car or on your phone. And you know that if you make a turn, it's going to tell you where your destination is, how far it is away. If you look at the graph, it'll tell you how many actions have to take and so forth. Did you have enough time to do it? That sort of thing. Step by step directions. And this is obviously, everybody knows that's a that's a GPS to get you from where you are to where you want to go. And with this platform, you'll figure out where you're at in real numbers to see what you have, where you're at now, and what your goals are. And you set them. It's what we do is personalized to the penny to each individual, whether it be a single or family. So it's the same concept. And I'm not going to go through the minutia of going through step by step and how the whole things work, because there's a free presentation tomorrow night at 9 p.m., which we'll give you a link to, that goes through the debt elimination side. And then tonight also at 9 p.m. is a live presentation of what you're going to see here now. MoneyMax is the financial GPS, the only one of its kind. There is no other program like this. MoneyMax is for debt elimination, and MoneyMax Pro is for wealth creation. But they're both the same. They're both the same package. If you buy the MoneyMax full package, which is $39.95, is the actual average price. Each individual situation derives its price from that. And we offer multiple ways to pay for that, even teaching you how to let's use other people's money to do so. So if you have the MoneyMax and you want to begin to grow wealth at the same time, you already have the tool. There's not another tool to buy. Today, we're going to talk about the 9 banking principles one at a time, a little bit, but the big one we're going to talk about is arbitrage in the middle. Closed-end loans are like mortgages and car loans and student loans and stuff that's got a beginning and an end and a structured payoff situation that you cannot deviate it. You can put money in, but you can't get money out. There's strategic debt payoff. That's how we strategically, to the penny, eliminate your debt. You can also accumulate interest at the same time. You can cancel interest. You can have open-ended loans and lines of credit. We're going to talk about offset accounts, and we're going to talk about float and leverage. But the big piece we're going to talk about, how they all tie in together, is arbitrage. Now, here's a quick example. This is an example on a $400,000 loan, 6% interest rate with a 30-year term. If you look in January, you'll see what the payment is, $2398.20. You make that payment, the bank's going to take $2,000 of that $2398 as their profit. You're going to have your principal reduced by $398. Isn't that great? No. But if you look at the next line, again, February, $2398.20, it's going to be that way for 30 years. However, they take a little bit less in interest, $1998.01, big wow, and they give you a little bit more against your principal, like less than $2. And it goes on and on and on. And so if you follow the bank's plan, this is what it kind of looks like for 6 months. However, let's say in January you decide you're going to pay your $2398.20 and get that first month's result. But hey, what if we sent an extra payment or an extra $2,000? We could pretty much knock off a payment at the end of the loan. Well, that's common thinking. But in actuality, one $2,000 payment actually knocks off $10,000 nearly in interest that you would normally be responsible for. and your principal has now been lowered by $2,021. Huge change. Now there's a strategic pattern to follow and commit to make these things happen. But this is the basics of how the debt side works. And it works for all debt, whether you have a mortgage or not, doesn't matter. If you've got a car loan, yep. You've got student loans, yep. You've got a disabled son or daughter, and you need to worry about building wealth so that after you're gone, if something happens to you, the child or children will be taken care of. Yep. Does it work for nonprofits? You bet it does. Does it work for clergy organizations? Yes, ma'am and sir. Now, offset accounts, there's several different kinds. There's a high yield savings account, checking account. There's a Velocity Banking home equity line of credit, which, if you'll remember 2008, they stopped those. You couldn't get one if you had the need for one. And then there's also the infinite banking high cash value permanent life insurance. Those are what's called open-ended offset accounts. Canceling interest. We have our mortgage, which is $400,000. If you remember that, no, it's a closed-end loan. And we have one of any of these, whether we have a HELOC, a personal line of credit, a savings account, or a permanent life insurance. They all work the same. Okay, and let's say the mortgage, as we said, was at 6%. We'll just call this a HELOC, but it could be any one of those down listed below it. Let's say we've got a $25,000 HELOC. Now, who here would use 10% money to pay off a $6,000 loan? I don't think the logic works through on that based on common knowledge, but the uncommon knowledge says absolutely do it all day long, and there's a reason for that. There's a reason that amortized loans take all of the interest up front and work very little on the principal balance, and the payments that are received against charges in the open-ended lines of credit or offset account, the interest gets recalculated the day of the payment. Even on the other side, the closed end doesn't get recalculated for another 30 days. So the banks have got us. They've never informed us. We don't learn that in school because we're a consumer economy and the banks run the world. Who's got the tallest buildings in each city with their name at the top? That's for a reason. Okay, so we're going to take $5,000 out of that open line of credit and we're going to pay down that mortgage just like we showed in the graph side. Okay, what does that do? Using 10% money against to pay off 6% loan. The future mortgage interest canceled is $24,000, and we've eliminated 12 payments. That's how the power of interest rate doesn't matter. It's how it's paid and how it's utilized. Pretty amazing stuff. A little bit about float and leverage. Everybody's got at least a credit card, or some wallets have 20 or 30 of them in there. Why? I don't know. But hey, you can charge everything you want and then pay it off. Responsible people pay it off at the end of the month. And that's using the bank's money without charge. Because if you pay your account off balance at the payment date, they don't charge you any interest and you start over again. So the length of time between your billing statements could be anywhere from 25 to 45 days, gives you that time to use the bank's money without any expense. But you have to be committed to doing it, and you have to be knowledgeable and have the tools to keep it in your face and remind you of it. Because the first time you get a $2,500 auto repair, you're not going to think about moving money from checking to savings and savings to Visa cards and stuff like that, because your mind is focusing on the big change. People don't like change. That's the beauty of the system. So float and leverage, that same mortgage, that same HELOC, our paycheck is $5,000 a month, and we've racked every expense up on our credit card for the entire month. So how does this work? We put that $5,000 paycheck back into the HELOC So we haven't been charged any interest. And when we take that money from the HELOC and pay all of our expenses, that's how that works. And here's cash value permanent life insurance. It's the Swiss Army knife of finance. And I like to use that term because it's so cool. There's numerous parts of whole life insurance, universal variable, indexed, and so on and so on. There's a lot of them out there. But the ones we like have guaranteed minimum interest rates, have access to the money, and no required minimal withdrawals. You never lose your principal amount. 0% is the floor. We're going to talk about that in a minute. And you also have living benefits if you have the right permanent life insurance, because it's going to have tax advantage loans and withdrawals. And tax advantage is the legal term for tax-free. It continues to grow even after you've withdrawn it, and you have post-tax contribution growth, which is tax-free, and you don't have to pay taxes later. So it's a pretty phenomenal program. Now I'm gonna start this at about
take a few minutes
right about
to
here.
the previous
Whoop,
videos
not
explaining
that.
advantage long-term residual income. Since 2004, we have helped thousands of individuals and families like you use the MoneyMax account to make strategic transfers that eliminate your debt the fastest way possible. This is using a principle we call interest cancellation. With the MoneyMax account, you utilize your checking account with another account to cancel interest and get out of debt at the same time. And we've been helping people do this for nearly 20 years. But now we have something even more powerful that takes this system to the next level. But first, I need you to understand a little secret. There's a principle that banks utilize every day that most of us never get a chance to. It's called no stagnant money. You see, banks understand that you can't just let your money sit there doing nothing, just like a bump on a log. If money is in an account, it should be making you more money at the same time. You've heard that money needs to be working for you, right? And sometimes, listen up, because this is the secret. Sometimes it can be doing two things at the same time. What if your money that was paying off your debt could be building your wealth at the same time? Did you hear that question? What if your money that was paying off your debt could be building your wealth at the same time? I'm going to get to that in just a second here. So
This is the really, really exciting part. So pay close attention, folks, and you may have questions, so write them down.
Go back to the MoneyMax strategy that uses a HELOC or savings account to do one thing, to help us pay off our debt faster than we would normally. But what if instead of using a HELOC account, there was an account that could do two things at once, where the money going into the account could not only be used to pay off debt faster, but also be working for us at the exact same time to build wealth and a retirement income? Think about it. There's a lot of money going through that account. That's right, a strategic account that builds wealth using the same money that we're using to pay off our mortgage and other debts. It's a revolutionary concept that will change your life. It's called a high cash value permanent life insurance policy. Let me repeat that. High cash value permanent life insurance policy. Now, let me quickly clarify what we're talking about so you understand how powerful this is. This is a unique life insurance policy with living benefits and easier access to the cash value it builds. How does it do this? It was originally designed for businesses to allow them to borrow from the cash to fund business ventures. However, it can now be used by individuals like yourself to access the cash value and pay off debt, while at the same time building wealth, even from the money that was borrowed. We choose this product because this policy allows you to access the cash value that you are building without fees or penalties. But it gets even better. So keep watching, because I'm going to show you something that makes this absolutely a no-brainer for using the MoneyMax Pro. We spent the last decade looking into high cash value permanent life insurance policies. And honestly, they all had high fees and just didn't work with the MoneyMax account. We went through tons of them, researching and evaluating until we found this one that met every criteria we had set to match up with the MoneyMax Pro account and replace the HELOC or savings account. Still an award-winning program, that by itself is incredible. But what I'm going to show you in just a minute could be the game changer for you and your family, because it turns the Money Max account into a system more powerful than we ever imagined it would become nearly 20 years ago when we first started helping people just like you get out of debt faster than ever before. Let me break it down simply so you can see how it works with the Money Max Pro system. Why does this make our already award-winning program even better? Well, first, a HELOC can actually be canceled or closed in a financial downturn. Many individuals experienced this back in 2008 and 2009, remember? Well, this permanent life insurance policy can't just be canceled or closed due to the economy. Also, the HELOC is tied to your house, but this policy isn't tied to your house. This policy is non-recourse. To qualify for the HELOC, they look at your credit, your income, and collateral. This insurance policy just looks at your health and income. The HELOC reports to the credit bureaus. The policy doesn't. The HELOC has a monthly minimum if you're carrying a balance. The insurance policy can actually fund itself after it's built up enough cash value. In fact, at a certain point, if your income stopped, it could potentially have no payment required. While if you stopped paying the minimum on your HELOC, the bank will come after you and keep trying to collect from you. You won't find insurance companies chasing you. We're going to go through all the details one-on-one with you and what you have to do to keep it active, etc. when we meet one-on-one.
Before we go any further, I wanted to, thought I was going to get out of here. Got to be smarter than the equipment. I was going to stop for questions and see if there's anything that is scary or unknown. Anybody at this particular point? Kimberly, how about you? Any questions? Clear as mud, right? Okay.
Actually, this goes pretty much in line with the training that we have received. And so I don't have any questions, but it's good to hear everything again so that it becomes more clear. And also, David, I just wanted to give kudos to you. It's not easy doing the same presentation that perhaps Lynn Spencer or Stephen Smith do, but you're doing a great job.
Oh, thank you. Thanks for that. I appreciate that. Anybody else? I'd like to go back to another section of the video, if that's all right with you, and show you a couple of real life examples. Let me get a little bit more of this video.
Or we cannot lose our...
And you'll have to share your screen, David.
Oh, I thought I did that. I'm so duh. Where is it? Where is it? There it is.
And Tiffany asked a question in chat. She said, how easy is it to convert a term policy to a permanent life policy?
As I am not a licensed insurance agent, I can only give you my best guesstimate is talk to your insurance carrier. There's a way to do that. However, term is based that way for a reason, that the payments are affordable, and the only way to cash out on that is to die, where the other styles of insurances operate entirely differently. So however much you have paid into your term life policy may be worth your while to keep it and add another policy to it. But you're best served by talking to a licensed insurance agent. If I can do that. Let's try right about here, I think.
How does this policy work hand in hand, similar to, but better than a HELOC or savings account with Money Max Pro? Let me show you. Unlike a HELOC that just has a line of credit, to understand how this unique policy works, you need to think of it like 3 separate accounts, all in one. First, you have the account value. As you contribute money into the policy, the account value grows. Second is the cash value. This grows like the account value, but you can actually borrow from the cash value. This is what allows it to be used similar to a HELOC or offset account. And third is the living and death benefits. We're going to focus on these two columns right here, but I'll come back to this later because it's just the icing on the cake. These three parts work harmoniously together in perfect sync to build wealth, cancel interest, and pay off debt simultaneously. They act as your protection and accumulation vehicles. Protection because of the living and death benefits that you'll see at the end, and the accumulation system that I'll show you in just a minute. So, how does this policy accumulate money? When you put money in this account, it adds to the account value. But that money doesn't just sit there stagnant doing nothing. It actually goes to work for you in one of the safest financial vehicles available. And I'll show you that and what it's tied to in just a moment. Benjamin Graham, the Dean of Wall Street, said, "The essence of investment management is the management of risk, not the management of returns." So what does that mean? You want to make sure your funds are tied to something with a strong financial foundation, not weak that can just fall out from under you. Ideally, you want your principal protected and free from risk or loss. You also want to limit your exposure to taxes and preferably grow tax advantaged. Many stocks and investment vehicles have high fees, so you want low fees and that don't get in the way of you building wealth. And you must be accessible or liquid, as they say. It can't be tied up. You need to be able to utilize it to grow your wealth. This is the other reason we choose this high cash value permanent life insurance policy. It has a low fee policy with accessible funds that can grow tax advantaged without fear of loss of principal. So why is this so important? Let's talk about the flaw of averages. Let's say you had an investment account with $100,000 and the stock market dipped 50%. Your balance would now be down to $50,000. This is where most people generally get lost. What does it take to get back to where you were? Most people would say, well, it needs to go back up by 50%. 50 down and 50 up makes the average zero, but you're down by $25,000. This is the flaw of averages. 50% growth at that point would only get you back to $75,000. You need it now to grow 100% to get back to where you were. This is the flaw of averages perpetrated by the financial planning world. The high cash value permanent life insurance policy is tied to a fixed indexed product. Now, what does that mean? Well, when the stock market goes down, the index doesn't go down. It stays even, or in other words, zero. But when it goes up, the index goes up too. Cash value access is currently only 4.6%. That's a difference of 1.65%, meaning even though you access that money to pay off debt,
I'm sorry, folks. I screwed up. There's a technical glitch that I can't overcome. However, I want to go on and show you a couple of live examples of what really can be done on both sides of the aisle, if you will. If you'll look at this financial report, it's got my name on it. Now, as I mentioned, I work pro bono for everybody. I haven't earned a penny of my own since 2020. And I've chosen to live that way. I've given everything that I own to my ministry and the people in Africa. I have no mortgage, thank goodness. And I have two loans, or two credit cards and one small loan. And I owe $5,700. My basic income is only $2,642 a month. That's my Social Security disability income. Okay, my monthly payments come from that and monthly other expenses, half of which are my housing expense, food, gas, insurance, blobbity, phones, this, that, and the other thing. Okay, and then I have $250 left. Well, if you look down at the bottom, say, it says that $170 of that $230 is 61% going out that's going to interest alone. It's going to take 22 years That's how the interest rates got us. They grabbed us and they're keeping us if we pay the minimum payment. That's why it's so valuable to pay everything off if you can. So it'll be January 2029 from now before you have paid off half your debt, and you'll still owe $2,700. Pretty scary, isn't it? Well, that's what I thought. And I'm not in presentation mode anymore. That's why. Okay. And this is the bottom half of the report. In the red is the bank's plan. 3 times your current outstanding balance. That's if I paid it off according to the minimum payments, that's what I would end up paying. And I'd have nothing at the end. 22 years. The money max, I'd pay about half of what I owe. I'd save 2.57% this little interest on a 30-year plan. I'd be paid off in 2 years, which is already less than that. And I would start building wealth and have, even in a savings account of 1%, $130,552 if I live till 90. Well, my plan is to live till 95. So I'm doing just great. This is what it would look like from a graph standpoint. In red is the bank's plan. In blue is the MMA. As you can see, it gets paid off rather quickly. And then the Money Max account wealth accumulator goes to work and builds up that. Here's another real live example. This is my friend Dan and his wife Kim. They're neighbors of mine. I live in sunny Florida, in Clearwater, a few miles from the beach. They have in a condo. They have a condo here, but they have a house they bought about 18 months ago in Minnesota. That is their summer home. It's about a $580,000 house that they bought 18 months ago and have a $430,000, almost $431,000 balance. Their interest rate is 2.25%. They pay off their credit cards every month. So in order for them to be even showed up, I had to put $1 in each one. Okay, they're both from the same bank. And their income is $19,000 a month. They have debt payments on miscellaneous other debts of $2,500, and their monthly typical expenses are $15,613. That's a lot of expense for 2 people. And so I showed him this, and he said, you know what? I have 2 index accounts that generate more interest than what it costs me for my mortgage balance to go down. So if I were to take money out of the index folders accounts, I would devastate that. Sure, I could pay that mortgage off with one check, but it works better for me financially to do it that way. And I said, oh, okay, so are you satisfied paying out $15,000 a month on your expenses? Well, yeah, but that's just part of the deal. And I said, what if we could have that money working to pay both your monthly expenses and building another index account? So that's what they've done. Now he's got $2.5 million in index funds now. And with this program, he'll have $5.5 million more in another index account in the next 8 years. So it's powerful. This is what his graph looks like without paying the house down and just letting it go the way it is. But as much as I would love to see him pay the house off, he has been in investment clubs and has made his decision. So that's fine. We're still friends. He's got nephews and nieces he's introducing me to that he wants to help get them out of stuff too. So I do things a little bit differently than the typical agent with United Financial Freedom. I don't do anything wrong. I have an extra touch. Because I'm a giving person, I have a personal success coaching option that I give every one of my clients that says, how about a weekly check-in to see how you're doing? Are you working with the account? Are you working with your Money Max to get those transfers going? Are you staying on track, and those so forth? And then I'm also there for them to check in, ask any questions that they have, and do it. So that's another service of the Debt to Wealth solutions that are unique to me. I'm sure there are others, but we're at the point now of questions. So I'm going to stop sharing for a couple minutes and then we'll wrap up. Have we got some questions? Fairly clear?
Anybody have any questions that you want to note verbally, or you're welcome to add them into chat if you feel more comfortable doing that. But any questions at all? I know that sometimes throwing around a lot of financial terms might be difficult. So I don't know how many of you understand HELOC and some of the other terms David used, but if you have any questions at all about any of the terminology or any of the concepts, this is a safe place. There's no shame in asking questions, no matter how basic you think they are. Yeah, Wendy.
Yeah. You said tonight there's a training on how the whole thing actually works. Are you running illustrations, or how are you doing it?
I'm not doing it. There's a live presentation with our senior leadership conducting it that does it live. There's always about anywhere from 20 to 50 people on it. They do it step by step, and they take the hour long, probably about 50 minutes of that, and they go into much more detail than this. This is an overview.
And I also just want to note that the time that you mentioned, David, is East Coast time. So you said 9 o'clock, but
9 o'clock
9 o'clock
Eastern.
Eastern,
Right,
and then
7
8 o'clock
Mountain.
Central, and
Right.
Yeah.
It's 9876. Right.
So they're going to show like how you're using the IUL to fund or to use that for your debt.
Yeah, I would say that if you're interested in this, this is a must go to. It's not the only time it's done, on Wednesdays.
Every Wednesday
or at night. Yeah.
Okay.
So,
And then I just want to
do
point
that.
out that in the chat, Debbie Lynn was kind enough to add the 7 gifts that David talked about, right? The 7 gifts that he's providing everyone that came today, as well as a link to join the training. So if that's something that's interesting to you, just know that tonight's live wealth presentation, the link to join that is right here in the chat.
Yep. And I want to do a little bit more online for a moment. Why am I not getting my, okay. As I mentioned, it's not the full presentation. We touched a little bit on debt elimination, but most of the focus was on wealth creation. That video is about 30 minutes long, and I can include that in the email response with the videos, the slides, and the slides, that video, and the gifts if you like. And you are invited to register for a full presentation on both sides by contacting me at moneymaxaccount.com/Trinity Brands. Contact me.
All right. So I just really want to thank you, David, for being so generous with your knowledge, your expertise, your resources, your gifts, your training. It's really been incredible. And Debbie, thank you so much for adding all the free gifts, as well as tonight's training and tomorrow's training. Really appreciate that. If any of you have questions for David, you're welcome to reach out to him separately. As he noted, we've added his contact information in the chat. So you are welcome to reach out to him directly if that serves you and if that's helpful. Sometimes it's a little intimidating to ask personal financial questions in a group setting, and I get that. But if you have very specific questions about life insurance you may currently hold, or your own debt to income ratio, or really what it is that you're trying to manage financially, whether it's wealth creation or debt cancellation or a combo of the two, David's a really knowledgeable expert, and feel free to reach out to him, please. In the meantime, I just, again, David, want to thank you so much for so generously sharing your knowledge, your expertise, your experience with all of us. I think this is a really novel concept for a lot of people, that they can pay down debt as they invest their money, and they can see this transformation really happen in their financial life. They can see immediately how that transformation begins to take shape and form, paying down debt while they invest. So this was really, really informational, really, really helpful. And for those of you that are not leadHERship Global members, if you'd like to learn more about how we can collaborate, how we can work together, I would love that. So I put in the chat my own calendar. So if you want to meet with me, if you want to talk about what leadHERship Global is all about, and you want to know how you can leverage the privileges, benefits, and opportunities within this community, I'd love to meet with you. Would love to collaborate with each and every one of you. So I want to thank you again. And if you have any questions at all, you are welcome to reach out to David privately. Kathy, thank you for being here.
Oops, I just want to say one more thing. If you're not a member of leadHERship Global, you're missing something big, because this is a powerful organization of women helping women. And us guys come in there and do some stuff too. I've been to many of the presentations that go on, several every month. There's lots of training. There's lots of interaction. It's great, great, great bunch of people. So thank you all for coming. I'll make sure that you get all of this stuff, even if you didn't get a chance to grab the chat. But thanks again. God bless us all.
Perfect.